All right. Hey, everyone. I know I'm running a little bit behind today, so I apologize for that. uh, man, you guys got a chat here waiting for me. Look at that. All right. Sure. I see a chat from Ricky. All right. Grego. Hey, happy holiday, James. All right. Cool. Yeah, today's a holiday. I was even debating doing this, but I'm like, you know what? I got to wait another week and this and that. So I'll just run a little bit behind and at least get something in here today because, the market was open briefly. So we'll go over a few things. Now, if you're new to the stream, welcome. I'm not expecting much people here today, but here's what we're going to do. Again, we're going to run through the charts as I usually do. First, I'm going to run through the economic calendar. There's really not a whole lot to say there. Then we'll do the charts, and then I'll do some requests, and then we'll call it a session. Now, uh, one thing I want to say is, holiday. When you have a holiday starting out the week, the whole week is probably going to be slow. So we can segue into the economic calendar here. Anyone know what we have this week? Worth mentioning? It's the first week of the new month. What do we have? Anyone want to mention? And you should probably double check, but I believe that's the number one economic event. It's always a good idea to check the economic events at the beginning of the week because you want to be aware of what kind of market moving events can occur. Hey, Kai. Yes, right, correct. The non-farm payrolls. And after the previous one, the August report, the drama that followed that one, this one is obviously going to be closely watched, right? Especially for the revision. So just keep that in mind. And with this month's, I believe it's this month, the FOMC is going to meet, and they're expected to cut, right? So the non-farm payroll report may give us some further hints into that. If the report comes out inflationary or whatever, then it kind of gives the Federal Reserve more of an argument not to cut. But I don't know. It seems like everything that I come across, all the propaganda that I watch, seems to favor him cutting. Alex from Romania. How are you, Alex? Good to see you. Thanks for stopping by. I got my crew. That's why I do this, because you guys show up. I was like, man, if I don't do this, these guys are going to be looking for me. And I know it's only 5 guys, but it's the 5 same guys. You guys are committed, man. So anyway, all right, so non-farm payrolls. That's the only one worth mentioning, right? So just watch for that. Now, the week could be slow going into it as a result. Again, we're in holiday mode right now, right? We just got out of the 4th week of August, and we're in the 1st week of the new month. This is usually what volume is pretty low in this area, right? Unemployment, right, and employment rate, right. You got it, Grego, right, right. So that's the only thing worth mentioning. If there's anything else, don't even pay attention to it. Only, come on, Alex, I'm used to it. No one likes me. It's too late. It's too much work to press the like button. It's all right. The YouTube algorithm doesn't like me either. So anyway, I appreciate that. So that's the economic calendar. There's not much to say more about that. Okay. Just again, keep it just in this type of environment. The stream is, I appreciate that. Yeah. Except because I don't have a nice car in the background, no one watches me. Anyway, I appreciate that. So, yeah, so let's move along from the economic calendar and get right into the charts, right? Now, you guys, if you read my trading view article that I put out yesterday, I highlighted the fact that we'll begin here with Bitcoin. We overlapped the 108K, right? Now, I've been talking about that for a while. We talk about this every week, right? Kai was even asking me about this a week earlier. And okay, yeah, so this 108K, like I said in my report, what this does is, again, I'm not going to just jump from bullish to bearish and be like, hey, like all the other clowns. What this does for me is it just helps me adjust expectations, because if we are officially overlapped, which, and I say overlap because I'm counting this as wave 1 over here. If we're overlapped, all that means is we're most likely not in an impulse. All right. we're most likely not in an impulse. So if we're not in an impulse, then that's going to adjust expectations. I'm just trying to read these comments here. Forget the car. All we need is. Speaking of model, I met a girl a few days ago. Man, if I had this girl here, like she had nothing. She had a boyfriend anyway. Of course, she had a boyfriend. If you saw what this girl looked like, I was just, when I see a girl like that, again, I don't, in my mind, I'm making a big deal, but I don't, I'm not like one of these simps. Like, oh, look at this beautiful girl. But oh man, the first thought I had was, if I go rent a Ferrari, I'm going to ask her to be in the video with me. I'll pay her. I'm like, listen, I'll give you $100. Just sit in the car next to me and pretend to like me, right? Just so I could show off to all the guys that think I get beautiful girls like this. This girl was like, if I have to give her a number, I mean, like a 9. I mean, 10s are very, very rare. Usually 10s are escorts and stuff like that. But this girl, for like a regular girl, she wasn't like an escort or anything. She was like a 9. She was beautiful. So yeah, I see these girls on occasion, but I don't waste my time because, and she was young. This girl had to be like in her 20s. And she was like stunning. You don't see too many girls like that. And she was nice. She was actually very nice for a girl that looked like that. So anyway, I'm hoping to make some more videos about girls, by the way, because it's a very interesting topic for me. I like girls. Even though I don't get any, I still like them. All right, enough about girls. Let's talk about Bitcoin. Because if we can make some money with Bitcoin, then maybe we can get some girls, even if we have to pay for them. So anyway, yeah, so this overlap, what it does is it prompts me to adjust expectations, okay? Kai says effective beauty, handsomeness on the environment may be the most valuable. Yes, there is a value there. Their looks are a value, especially. I mean, that's why a girl can easily come on, do a stream or whatever, right? A YouTube channel about anything. It could be about markets, it could be about shoes, it could be about anything, and she's going to attract a following because simply she's pretty. It doesn't matter what she says. It doesn't matter what she's talking about. She's just nice to look at. She will attract a following. In fact, there's a guy I watch, Lit Nomad, and he constructed a very interesting mathematical model that kind of addresses all. Very interesting. I love that guy. Anyway, you guys should check that out on that topic. He's a quant. He's a retired quant, so he looks at everything like in mathematical models, and I like that. Most guys would probably appreciate something like that because it's very logical and it's something you could measure. Right, guys, naturally we like those things. So anyway, but yeah, it's true story, Kai. So anyway, yeah. So let me. You guys are having me running on tangents all over the place. So this overlap, like I said, it prompts me to adjust expectations. So what that means is buying this pullback is going to be tricky. That's the first thing. The typical trader is going to buy this pullback because everyone's going to say, hey, buy the pullback, bro. Right? But this is going to be a tricky pullback because if this is the beginning of a corrective structure, which that's what they wait for overlap signals. Okay? It's the beginning of a corrective structure. It's all about support and resistance, isn't it? I guess so, UTXO. Yeah, you can definitely fit those words in there for sure. Yeah. So if this structure right here is the overlap, then it's basically signaling to us that what we're in is a corrective structure. Now, corrective structure doesn't mean necessarily bearish. It could mean consolidation, right? And the broad wave 2, which this can be the beginning of, could just be a consolidation, just like I brought up the example of gold. Gold consolidates for like 2 or 3 years at a time before it breaks out, right? It's a bullish consolidation, but it consolidates. And it'll have like a range, like a pretty wide range for a while. Eventually it breaks out, right? Bitcoin can do that too. So if this is the beginning of a corrective structure, meaning a broad wave 2, then we may see, I suspect we can see, it becomes within reason. I can't say that it's an accurate forecast because I don't know the future, right? I don't pretend to know all. That's all nonsense, anyone that claims that they do. But it opens up the possibility that we're in a broader wave too, right? So when we look at the weekly chart, and if we're saying that this is the beginning of the broad corrective structure, and we look at the broad structure, which is this entire wave over here, I mean, that's the impulse wave, right? Right? This is all wave 1, wave 2, right? Wave 3, wave 4, and this is like wave 5. This entire thing is like wave 5, right? So that's why I say wave 5 of 5, and then we have a wave 5 of that, right? So if that's the case, then we're looking for a pullback that's within this magnitude, right? So a reasonable pullback, let's just say it consolidates. A reasonable pullback goes back to like these areas right here. What is that? 90, low 90s, 85s, something like that, 80s. That's a reasonable pullback. That's like a 382 pullback on this magnitude, something like that. That's within reason, right? That this could be the beginning of that structure. And that structure can take 6 months to a year to play out. That's what you have to realize. This is not something that's going to play out tomorrow. Oops. It's not going to like play out tomorrow. Hey, Slows, how are you? Right? So that's where my expectations change a bit, because like, okay, this thing may be in broader pullback mode. Sort of like, we've seen these broader pullbacks, but the thing is, we have a 5-wave completion now. So what that tells us is the pullback should be a larger magnitude. That's what that tells us. Or at least that's a reasonable expectation to have. Now, that's the sort of like the bearish story, right? So that information becomes helpful if you're thinking of investing, because you say, hey, you know what? From Mexico, viva el México. Mucho gusto. Puedo hablar algún español. Yeah, I can speak a little Spanish. Poquito. Las palabras malas solamente. All right. So anyway, so like I was saying here, we can get like that broader pullback. That's sort of like the bearish scenario. And that pullback can reasonably take us somewhere in here, right? Over the next 6 months. That's the investor perspective. So if I was looking to buy Bitcoin as an investor, how this information helps us is basically we say, hey, you know what? I'm not going to be so quick to buy this pullback, or I'm not going to have high expectations if I do buy the pullback, right? Because there's a buy signal developing here. But if I, like, let's just say a signal goes off and you say, I really want to take this as a swing trade. Okay. If you want to do that, it doesn't mean that this thing is not going to retest the highs or anything. It's still possible, but I would not be expecting that as my profit objective. Does that make sense? I would not be expecting this. That would be unreasonable or low probability. It can happen, but if we can assign a probability to it and say, okay, you know what? I'm going to assign like a 20% chance of that happening. Why would you bet on that? Right? That's kind of a, it's not really in your favor compared to a much higher probability of it bouncing and maybe retesting this midpoint area right here, which is, the 115 to 118 area. That's, maybe there's a 50 or 60% chance that it gets up there, which is random, right? If it's 50% chance. But logically, the more you expect, the lower probability. And if we have 5 waves in place and we're in a potentially bearish structure, then I think that probability idea sticks more. You guys understand that? That's really important for investing. Or even, like I said, swing trade, right? If you want to swing trade, you're just going to go into this with lower expectations, as opposed to many people out there who are going to buy this pullback aggressively, which this is not the pullback to buy aggressively. You had plenty of other ones, okay? Wave 4s, whatever, other consolidations, higher low consolidations. After 5 waves complete, that's not the one you want to buy aggressively. Or if you buy it, you want to have lower expectations. Why? Because if this is the first wave, right, wave A, which can be made up of smaller 3-wave structures, that's typical of a corrective wave, right? This next pop-up is likely to be the B wave, right? And B waves are the ones that fool everyone because they look like, oh, the trend is continuing, but it's not. So you have to be very prepared for that. Maybe it continues. Maybe I'm wrong Maybe this overlap means nothing. That's also a possibility. And maybe this is the failed low to buy from, but are you willing to take that chance? At least, if I'm giving you this information, you're aware, okay, you know what? This is going to be a less reliable low to work from. So I'll go into it more cautiously as opposed to, it's just a pullback. It's just noise. I'll just listen to Michael Saylor and I'll just invest all my money into Bitcoin right now because every time he calls it a pullback, it rallies to new highs, right? I'm saying that this is a suspect one, right? Now, like I said, I could be wrong. Maybe this thing rallies and breaks the highs, all right? And if I'm wrong, then that means this overlap doesn't count, is what that means. And that means that this entire thing was still a wave four. Because this overlap, it's borderline a bit, but we have to call it an overlap somewhere. There has to be a point where we say, okay, it's an overlap. We closed below the 108 briefly. We're still kind of messing around there, but I would say it's not an overlap if we were straight back up. Like if we were here briefly and we were like straight back up into 112, with very little to no time. We spent a few daily candles below. So I'm going to call that an overlap. And that's going to, again, prompt me to adjust my expectations, keeping in mind that I could be wrong. Does all of that make sense? Like, do you guys, from what I'm telling you, do you guys find that valuable as far as how you can guide your own decision making? Because that's the point of this stream, is to prepare you, give you the tools so you say, okay, all right, so if I do want to buy this, I'm going to expect less. If I do want to buy this, I'm going to look at a midpoint area for a profit objective. Excuse me. I'm not going to look for the highs as many would. Does that make sense? Or I'm going to try to carry a runner if I can and give it a chance to get to the highs, but I'm not going to have very high expectations of that. Does that make sense? Excuse me. Have you, Slow, the one that I was doing on Wednesdays? No, I canceled that. I canceled it because it was taking too long and the environment just completely turned to garbage. So I was like, you know what? This was like first week or fourth week of July. And I was like, all I'm doing here is churning this account. I never blew the account, but the thing is I wasn't getting anywhere with it. No one was showing up to my stream really. So I felt like the whole thing I wasn't getting anywhere and it was going to take me forever because the real way to beat those evals is to just go heavy and then reach the profit objective that way, right? And then you have to have your system for the performance account. So to answer your question, no, not that particular eval. I just canceled it. Okay. It's still a good reward risk. Well, yeah. I mean, the 50K account for the amount of money. In fact, Apex has a sale. I don't know if the sale is still on, but I got an email and you can actually use if you're going to sign up for it, you could use my code over here. But they had a really, really aggressive sale, just I guess the holiday sale where it's like 90% savings and even like on the 300K accounts. Plus they give you half price on the performance accounts, like the what do you call it? The setup fee. So it's like $85 for the one-time payment rather than 140, which I thought was pretty cool. Yeah. So if you're interested in that, I mean, you could use my code. You would still get the savings whether you use my code or not. You don't have to use my code. It just helps me out if you use my code, right? So and that's what all these guys were doing. That's why I was doing those Wednesday streams or those daily streams. But I'm like, you know what? This is just not. I couldn't justify the time. I'd rather work on my own system and refine my system and all that stuff. So yeah, it's super cheap, but there is a catch to the cheap ones, right? And I've explained this before. Since you're bringing this up, I'm just going to mention it real quick. The catch with Apex is, they lure you in with that super cheap, so you're paying like $17 or whatever, and you could get like a 300K account for something like that, like under $50, which is amazing. But the catch is when you beat the eval, because again, when it's that cheap, you can go real heavy and it doesn't matter if you blow the account, right? The catch is when you beat the account and you pay the setup fee, which could be $140 because typically that's what it is. then you have to beat the eval again, right? You got to make on the 50K account, you have to make $2,500 or $2,600 again. So the first time you have to do 3K, right? The second time you have to do 2,600, which is essentially the same thing. So it's a two-step process, but they kind of deceive you into thinking it's a one-step process because like, oh, I beat the eval, and they send you like a thing, like a reward, an award thing with your name on it, and you're like, oh, I'm so proud of myself, and then you have to do it again, and that's where people they blow the performance account, and then you got to start over again. So it's a two-step process. Understand that. If you really go into the fine print, you could find that out for yourself. But most people aren't going to go into the fine print. They're just gonna, I beat the eval. That's good enough. And then you're gonna automatically think, well, I won, so now I should be getting payouts. Well, to get the payout, you have to do it again, right? Just to let you know. You got to be honest with these things. A lot of these frauds and these fake gurus, they don't even mention that. Hey, Apex, hey, they're great. They're great because they're cheap. That's why I like them. But understand the game you're playing. Okay? Understand the game. So, yeah. So anyway, and I'll get more into that. But the key to beating the prop firms, again, is you must have a system. And I would argue to say a tested system. One where you say, okay, the probability of this thing producing this much money is this. And that part of that comes from back testing. Do you think that the rate cuts are overrated in terms of, okay, that's a good question, Grego. So, all right, let me just make sure first. You guys are clear on the Bitcoin analysis, right? I mean, do you have any questions about it? Because it looks like we're trying to get a buy signal here, but there's no volume. We're in the middle of a holiday. So this doesn't really mean anything. And this structure in and of itself is bearish. So, if you're going to swing trade, you're going against that. Number one. Number two, something like this would be better probably for day trades. Whenever things are very conflicted, I think resorting to day trades is a good choice if you're advanced enough, right? Because you minimize all the exposure to all this other stuff going on here. Now, to answer your question, so let me know if you have questions about Bitcoin, anything that I said about Bitcoin. Let me know if you're confused about anything. So I'm going to address Grego's question here about the rate cut thing. Yeah, it's priced in. Okay, I agree here with Slow. It's priced in. I mean, if you just watch, I watch a lot of economic guys, and even the Fed rate tool, right? You don't even have to watch YouTube videos. If you just look at the Fed watch tool, it's priced in, right? There's like over 80% or like at one point 90% chance of a rate cut. That means the market is priced it in. Okay. Show your best strategy. Well, that's the Trade Scanner Pro. But and I'll show that. Like I usually show that on these charts. In fact, I just turned it on over here. And coincidentally, there's a buy signal in Bitcoin right now. But this is what I mean, guys. Like I would not be, first of all, look how the buy signal developed, right? And as you guys know, when I was doing my day trade streams, I would say, don't take this initial signal. Wait for the pullback after it, right? Use this as a heads up sort of thing. Anyway, that's how you trade something like this. So we could say that there's a buy signal present in Bitcoin, but after everything I just said, you have to be very careful with it. So, slow. So typically August, these 2 months, this month and August, are typically bad months, right? That has a lot to do with volume. And I talk about that all the time. It's a seasonal thing. So the rate cuts are priced in. So even on the next meeting that they have, right? If he cuts 25 points, that's expected. There's no reason to be going all excited about it. And the fact the market may even sell off because, again, that's priced in. He would have to do something unexpected, like cut by 75 basis points. That would be a surprise, right? That would be, I'm feeling a big points. And then, of course, the conference will be very telling because that's where he gives clues about further cuts, how they plan to go about it, what they're looking at, all that other, and that can affect the perception. Again, this is always about anything you trade or invest in. is about the future perception, right? It's the market perception. It's the aggregate perception of the future. So if there's an optimistic future, prices go up now. If there's a pessimistic future, prices go lower now. It has nothing to do with whether the future outcome actually comes true or not. Has nothing to do with it. It just has to do with the perception. That may be hard for people to understand, right? Because people think in a more logical, linear way, like, well, if the future is good and then the future happens to come out good, the market should like that. Well, no, the market is 6 months ahead of now. So it needs to feel that the next 6 months are going to be good. And then it goes higher, right? That's how you have to think of that. The market prices in the future, right? So all that rate cut stuff, it's priced in, which means also, right, that's right, UTX. So it's exactly right. See, he says it here. Can I show that? Yeah. So, it's what basically it's priced 6 months ahead. Right. So, and again, it doesn't matter. It doesn't matter if it actually plays out or not. Okay. It doesn't matter if the future is accurate or not. What matters is what the market thinks of the future, right? That's called sentiment. So that's, don't get mixed up otherwise. And so this rate cut thing, it's priced in. There will have to be a surprise. Now, at the same time, this sentiment, because the positive rate cuts, or the rate cuts, I don't want to use confusing language here, because they're priced in, if he says something that is not spectacular, like if he says, okay, we're going to cut 50 basis points and that's it, we're done, no more cuts. If he says something like that, the market's probably not going to like that because that's it? We want more. You can't just have 50 points. Like if he goes from, okay, we're going to do a quick cut and then we're going to be hawkish. He says something like that, the market's going to, not do well in something like that. The market wants to hear quantitative easing. We're going to do some quantitative engineering, blah, 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 and we're going to print a lot of money and we're going to borrow $10 trillion. Like that's what the market wants to hear, right? By the way, that's all inflationary. So at some point, excuse me, it's at some point, I don't know. It's very confused. I saw a thing. I'm very confused by this, by the way. I saw a thing where they're considering doing gold-backed treasuries, where you buy a treasury, but you don't get an interest rate. On the maturity, you get a bar of gold, okay? Which means the government doesn't have to pay interest on it. They're just giving you a bar of gold. And whatever the gold is worth, that's your interest, right? I thought that was interesting because they're having a problem with these treasury auctions. They're trying to sell too much, and people are like, whoa, too many treasuries for sale here. When something has to go on sale, it means no one wants it. It's like when you go to the supermarket, right? And they put something on sale. It's because there's too much of it, so they need to get rid of it. So they lower the prices. So they'll be, oh, it's on sale, I'm going to buy it, right? Because it's cheaper. So they're having that problem with the bond auctions because the government's they need to borrow all this money. There's a lot of stuff going on with that. So that stuff can be problematic. And I don't know, so the Fed is caught in a tough spot. So it looks like they're going to be forced to cut rates. But if they cut rates too aggressively, either way, we're going to have inflationary problems because we have inflationary problems right now. So I don't know, man. I mean, so if we do have an inflationary problem, that only means more positive or higher prices in general for things like Bitcoin or stocks or whatever, because they are, as the dollar loses its value, these prices are going to go higher. That's the fundamental argument, unless something changes, right? So the Fed, again, remember, the Fed has two jobs. They're supposed to maintain the stability of the job market, right, by controlling short-term rates, and they're supposed to, it's a job market, and they're supposed to basically manage inflation, right? Job market and inflation. The problem is when they're two conflicting things, right? Weak job market and rising inflation, they're screwed. What do? Because if you start messing around with rates, you're going to make one worse than the other. So I don't know. That's going to be interesting. And it looks like, as we know, with all the stuff we've seen, Powell is pressured. He's being politically pressured on top of what's going on economically. He's being politically pressured to cut the rates. So I don't know. Anyway, all right, let me move along here because we're supposed to talk. I've been talking 30 minutes. I have this Bitcoin chart up here. Let's talk about other things. So speaking of the bonds and all that, let's take a quick look at the S&P because I'm very interested as far as an investing in an investment vehicle. I mean, this is really the easiest place to go is right here. Okay, the S&P, SPY. Like as an investor, this is all I'm interested in. You don't have to. This is more of the conservative side. If you want to have an aggressive portfolio, yeah, you could pick single stocks, but the conservative side, all you need is this. You don't need anything else, right? And a lot of professionals would agree with this. And so the thing is, okay, I want to buy S&Ps, but do I want to buy them up here? This is where technical analysis and having a good grasp of where you are in the wave counts can help guide you on how to invest in something like this. So I just want to talk about that real quick here, right? So this is the S&P since April, right? NEO started to make some moves. Oh, cool. Okay, we can take a look at that. Yeah, and guys, if you have a, I know you guys put like, I guess, what's his name? Ricky put oil in the chat, so I'll try to remember that. But if there's other things, just put them in the chat, or when I get to that part, just put them in the chat where I'll take a look at your stuff because I want to try to look at a couple people's charts at least. All right, Ricky was like the first one on the list there. So I'm interested in investing in SPY, but should I be buying it here? One of the problems, I watch a lot of YouTube, and I see people saying, "Whoa, the market's just going to go up forever, so just buy them." Do I really want to buy them up here? Like, come on, man. Like, that's kind of, I don't know. It's kind of amateur, don't you think? So, yeah, we're going to take a look at gold. That's one that's on the list. Don't worry, slow. So my point is, when it comes to investing, and you can, what I'm about to say, you can also employ this in Bitcoin as well, or any asset that you're looking to invest in, right? This is where a chart can be very helpful. Number one, yeah, the trend is bullish, but look where we are. I mean, let's go to a weekly time frame just to get a little more perspective. Look where we are. This is nonsense levels. I mean, look at this. Do you really want to buy it here? This is potentially the top. Now, of course, I've been saying that every month, June, July, whatever, right? Every month we get these top up. We're at all-time highs. So that's like buying up here, right? Which was foolish at the time. If you managed to hold on to that April nonsense, right? The tariff drama, then yeah, you're doing great. But man, you had to take some pain. So I'm not interested in taking that kind of pain. Okay. Oh, cool. SM. Okay. That's good to know, Alex. That's a Romanian company, right? Gold is up over 10 since the Fed received a mandate to try to price stability. Sounds like you. Yeah, right. Yeah. So, I don't know. The Fed. That's another. That's just another conversation right there about the effectiveness of the Fed and their policy and how it's helping rich people out though. If you're Jeff Bezos, you're doing well. So anyway, so the Fed's helping someone, right? So as far as like look at this, this is the SPY. Again, would you really want to buy it up here? Right? I don't. So I want to find levels, right? Now, here's a level. That's a pretty simple level. It's an old resistance, right? Now it's a new support. That's the 600 area. Well, the high of this area is 610, right? So 610, 599, that's like the range in that area. So you could round that to about 600. Right now we're at 645. That's a good 45 points. That's a pretty decent move for the S&P. That would be a place to begin, right? Now, my idea on something like this is, look, we don't know how far this thing will pull back if it pulls back. It may not really pull back. We may just get these little tiny pullbacks that we've seen for such a long time with the occasional steeper one, right? That's an inflationary environment. So something fundamentally would have to change to get more of a bearish structure, which we just never seem to get for like years and years and years and years. I mean, look at this. I mean, this goes back. Look at this. Right? That's why, like, this goes all the way, this chart, look, this is back at 2020, right? Look where we are since 2020. That's why you always get these, just buy the S&P, it goes up 30% every year. On the average, it goes up 10%. Right, it never pulls back because we have inflation. At some point, market cycle. At some point, there'll probably be a more of a bearish situation. But as you know, right, there's a lot of manipulation and a lot of stuff that goes on to kind of just hide that stuff, right? Like I watched one thing where they're changing the standards and how they measure a recession. So they're changing like the criteria so that basically we'll never be in a recession, even though if you go by historical criteria, we could technically be in a recession, but officially we're not, right? Because they changed the words around. Yeah, Alex, that's a good idea. I should make a video of the before and after. That's one I've thought of that too, doing stuff like that. And when I get around to that, that's certainly a content idea that I wouldn't mind doing because I call a lot of things that work out, right? And I don't sit here and brag about it because again, I don't know the future. It's just I'm looking at scenarios and I say, okay, I think this scenario has the greater probability. And a lot of times they work out. Sometimes they don't work out. Right. But the key is not whether they work out or not. The key is how you manage the risk when they don't work out. So, again, back to S&P, this is what I want to say about this. How do you invest in something like this if it never pulls back? So my idea is at these highs, I mean, you can avoid these highs altogether and just start waiting for minor supports. Just look at the weekly lows, right? These are weekly candles. Just look at weekly lows, right? And every time you touch a weekly low, like there was a weekly low touched in that sequence right there, from this green candle, right, to the pin bar candle, the weekly low is touched. Maybe in a situation like that, you buy one share, okay? At the weekly low, one share. Look how many times the weekly low over here was broken here, so that could have been a purchase of one share, right? So if you're accumulating one share at a time, at these high risk levels, and then you get a pronounced pullback, you won't be too heavy, and you can take the pain. So if the S&P pulls back 200 or 300 points, right? Like this pullback over here, how big was this? This was 123. So let's just say 125 points. That's a lot for the S&P. But if it does something like that to you, you won't have a lot of shares. So the pain will be minimal. You'll be like, so, and then you'll have the opportunity to start putting on more at way better prices when that pullback decides to show up. But getting in, like if you must get in, go as small as possible. That's one thing that I like about the, something like an ETF. You could buy one share at a time, right? One share, and then slowly build your position over time. But you have to have a method for it. You can't just randomly buy stuff, but like you can use the weekly lows as a reference point. You may not get filled every time. Let's say you're buying one share a week, right? Or every 2 weeks, you buy one share. That's only 2 shares a month, right? That's so why so conservative? Why? That's part of the method because we're at ridiculous levels. This is where you be conservative with your accumulation, right? But when we get to more reasonable levels, beginning here at this level, which can easily be broken, by the way, this could be a head and shoulders. This could be a shoulder. This could be a head, right? And then you may get another shoulder and there may be a massive pullback at some point, right? So if you're going to be buying the top of this thing, you want to buy it as small as possible. Does that make sense? So that's using like the chart and kind of structuring it or organizing it into risk zones, right? So obviously this type of technique is for dollar cost averaging and it's for investing. You're not going to be investing on the short side. So you're not going to use this for shorts. You'd only use this for longs or investing, right? So you get a chart like this, and it doesn't have to be the S&P. You could do the same thing. I've showed an example like this a long time ago with Bitcoin, right? Where you just kind of assign zones and you say, okay, this is the high risk zone. This is the middle zone, right? And then you have like a low risk zone. And you could do that based on levels. Or you can even use like retrace levels, right? And you get these zones. And the zones determine how you should invest, whether it should be your rate of investment. So like one share a week, if you're getting to attractive low risk area, because remember, you're accumulating shares. But if you're accumulating and you've bought a bunch at the high levels, but it's a small bunch. So maybe you've accumulated 10, 15 shares in that process, and now the market pulls back 100 points. And now you can accumulate, you increase your rate because you're at a much more attractive area to maybe 2 shares a week or something like that, right? And now you're accumulating more. And so I think it's like just a nice methodological way. Did I say that right? Methodological way. I can't even talk right. To accumulate without getting yourself into trouble. Because the problem usually is with these is you think it's never going to pull back. So you listen to some fraud on YouTube and it's like, hey, just buy this thing. And then you buy too much. In fact, I had this problem during the tariff pullback. I was selling puts into that. And I got caught. And not at the top. I got caught at a good price. And I still had to take some pain that I was not happy about. I got away with a profit in that position, but the risk was not worth it, right? So the lesson there was if I was smaller because I got caught around here, okay? I was selling puts in this area, and I got caught in this leg, okay? That's where I got caught. And I managed to hold on, and I made the money back, and I was selling calls on the way up, right? But if I had just waited, or if I was more conservative, I could have looked at these better prices as an opportunity rather than sweating them out. Does that make sense? So yeah, I mean, I agree. There is definitely you want to call it manipulation. There's the administration that we have right now certainly likes to keep things looking good, right? And they like to pull whatever lever they can, and they've done some funky things, I have to say. So you have to keep that in mind. Great if you're a bull and if you're rich, but not a good time to be a bear, right? And those because they're not going to do things in your favor, right? So anyway, does that make sense investing wise? So that's my thinking. That's what I'm going to be doing with the S&P, because if we're going, the reason what that even gets me to even think this way is if we're going into an easy money environment, monetary policy environment, then this thing is probably only going to work its way higher. Now, with maybe some pullbacks here and there that are a little more dramatic. Because remember, a pullback like this, let's just talk about this pullback real quick. And guys, let me know if this is boring you, just let me know. Because I mean, to me, this is interesting. And there's other things I got to cover here. I got to go over some other markets. But if you're like, can you move on with this? Let me know. I'd be happy to do it. Right? This stream is for you. It's not for me. So when we had this move here like this, understand that this was purely sentiment. This was tariff nonsense. The tariff situation was known. It wasn't even unknown. What was not known were the details. But the tariff thing was not a surprise. It was just when the details started coming out, then everyone pooped their pants, right? And then of course they made adjustments. They started saying, okay, we're going to hold off and we're going to move the day forward, and they started playing games, because that's what the guy does. He plays games, right? He bluffs. He's a negotiator. That's what he does. Okay, we know who I'm talking about here. That's what he does. He plays chicken. He plays games, and he plays games with the market. He plays games with China. He plays games. He's very tricky. And this was a game. So my point is, this was not the information wasn't a surprise. It was the way the market processed it when the market realized the reality of it, right? So, well, thanks, Slow. Yeah, I'm surprised too. But I've done a lot of research on that, and I know why I have no followers. So anyway, and I know the solution. It just takes time, and I'm working on other things too, so I can't concentrate on this 100% of the time. But don't worry, I appreciate that though. So you guys understand. The reason why I mention that is because a move like this, right, even though it's completely unexpected, can happen again for some ridiculous reason. Maybe there's a surprise at the FOMC. Maybe some other number or some other thing comes out unexpected and it changes the perception of the future. And then we see this out of nowhere. And mind you, when we had this situation, right, all the frauds, And all the renowned economists and everyone with, oh, I've been in this for a million years and I have all these degrees. They were all saying, oh, this is just the beginning. We're going to see a recession. The market's going to go to zero. The S&P is going to get cut in half. None of that transpired. None of it. It was all talk. But if you believed it, especially here, you would be, I need to get out of my stocks. And now you're watching this go higher and higher. I got shaken out. Never believe these morons. Never, ever, never. Okay? Pay attention to the chart. Now that was a tricky time. But if your risk was managed properly, then this could have been an opportunity. And at the time, I even made a video. I made a video. You can watch it. It's still on my YouTube channel. It was on a Thursday. I remember I made it on Thursday night. And I said, how I'm buying the bottom of the Nasdaq. I missed, it wasn't the bottom. There was still some more room to go. But my mindset was correct. Okay. I was buying to that steep selling because it was I believed it was an overreaction. All right. That's all sentiment. And sometimes that takes experience. A chart's not going to tell you exactly where the bottom is. But we got that high or low. And I remember when that occurred, I'm like, oh, that was pretty clear, right? And that was a good sign, right? Whether you follow any news, economic news or whatever, that right there was like, okay, this market is not making a lower low. That's a good sign. So if you want to wait for something like that, okay, so you don't get the bottom, but at least, you don't take the pain either, right? And you get to ride something like this. It doesn't always work out like that, but I'm just saying. All right. So my point with the S&P is, yes, I would like to buy the S&P too. I don't have any right now, but I would like to start buying one share at a time. Maybe week one, buy a share. Like maybe I'll buy one share this week. I don't like these levels. So if I really don't like these levels, I can just buy one share to at least get a little piece of it. And if I do it, I'll do it at the previous week's low. Because I want to have some sort of routine way of doing it, not just some random, I feel like buying it today. It has to be like a methodological way, a way that I could, I should be able to code this. I should be able to program it. It should be like a system like that. All right. Anyway. Okay. Enough S&P. I know I'm really going nuts today. All right. So I saw gold. I saw oil. Right. So let's do them in that order because actually I'll do gold first because we usually talk about these things, right? And it's on my title, so I should talk about it. Look at gold. Wow, Kai should be happy about this. Kai had a straddle on this. I remember that. Kai looks like you're getting that breakout. Nice, right? So the Trade Scanner Pro obviously had called gold along a while back. And again, as I talk about, right, if you talk about how to use the Trade Scanner Pro as a heads up rather than buying right into it, look at this great price you could have gotten. Okay, and it never went to the stop. Right? The risk was defined here clearly, okay, for this time frame. And look, it's almost at the profit objective. So that was a nice little move there. Beautiful. I mean, gold looks like it's on its way to break out here. Look at that. It's on its way to breaking out. What's the price of gold? 34, 37. I guess the all-time high here is 35. So we're on our way back up there, right? We're only 25 points. The high was 34.89. So looks like we're on our way, right? Now, does it fake out again? Who knows? But that's your profit objective, right? The profit objective is what? What's the price there? Just over 35, right? 35.10, 35.12. That's the profit objective on the Trade Scanner Pro. So use that as a guide. But if you're not in gold, there's nothing you can do now. Buying it now is high risk. If you're buying it inside of a very high risk fake out zone. Now it may break out, but I wouldn't buy this thing now. You had your chance to buy it back here. This is when you have to buy it near support levels. Or if anything, look at this consolidation. You see this all the time, right? This is a consolidation for the most part, except for this area right here, right? But for the most part, the price is contained inside of here. The midpoint often acts as a support or a resistance. That midpoint is also referred to as a point of control if you use something like market profile or volume profile. What all it means is price has spent a very, very long amount of time touching this point, which means a lot of volume has transacted there. That's typically what that means, right? A point of control is the price point where the most volume has transacted, or the price has spent the most time. That level becomes statistically significant, right? And often you'll see, look where it bounced, right? You'll see that often. So it's just something to look for. It doesn't work all the time, but it's something that is relevant, and that's why it has a name. It's called point of control. All right. You had your chance to buy gold, right? Yeah. Well, no, I mean, look, there's some gold investing opportunities, but if you're going to do it, man, at least wait. Look, there's plenty of reference points on the chart for attractive prices. It's just at these levels, maybe you don't want to go too heavy, or just think of a shorter duration. Maybe you're only in it for the breakout and then you take your profit or something, because this thing can have a steeper pullback. But fundamentally, everything favors gold. Not only that, but this time of year, going into December, is usually a seasonally bullish time for gold. There's actually an economic reason for that. So that you have that may boost gold along as well. There's no guarantee, but it's just another argument, right? Like if you look historically. So anyway, nice move, but this is a place to take money off the table if you have it, or just let it ride. There's no sell signal. There's no reason to sell gold at this moment. The only thing you have is a resistance area and there's no red candle. There's nothing there. So I would watch, like if you're looking at, if you're like, well, where should I take profit? You can use the profit objective, or wait till a red candle develops. Wait for a bearish pin bar or something. That's usually a good sign, right? To take some money off the table or do something, take your profit, right? All right, so let's move along. Let's do oil. I know Ricky put that thing a long time ago. Yeah, nice, Kai. Nice job on that one. So, yeah, Kai played both sides of that. Very clever. All right, so let's take a look at oil. We'll do CL1. All right, I got to start moving a little faster now. This thing hasn't done much, man. I mean, look at this. So we talked about, this is a nice example of what happens after a wave 4 overlap, because I determined that this was a wave 4 overlap, and it cancels out the impulse. So what it means is the price action that you get afterwards is typically consolidation-like, right? So if it's consolidation-like or range-bound, then that means you want to pay close attention to the supports and the resistances, because it's less likely to be in a trend, right? That means support and resistance levels are going to be where all the value is, not trying to capture trend moves, at least on the bigger picture here. Does that make sense? So as far as something like oil, right, you got this bounce that's trying to occur here, but I wouldn't sit here and even though like there's a short signal in this, I would ignore that. I would ignore that short signal, because this thing is not exactly in a trend, right? And I would defer to the levels and treat it like just a range-bound market. That's a nice thing about wave counts, is they can kind of prompt you for that, right? And help you adjust your expectations. So you say, oh, I'm not looking for a trend. A lot of times we're automatically looking for trends and not paying attention that the market is in a range, and we're better off having range-bound expectations rather than trend expectations, right? So in a case like oil, after this action, I'd be looking for longs at the support, right? For a reversal, double bottom, because we're assuming that the range will stay intact. That's around $61, $62, right? And the range high is up here, all right? $68, $69, right? So you're looking maybe a break and maybe fake out at 70, something like that. But that's your range. So if you're long right now, you're looking for maybe a test of something like that, or that's a little aggressive, or you look for the midpoint, test of the midpoint, right? You're taking profit. If you're short, then this is not what you should be seeing if you're short, right? If you're short, you have a higher low right here. And yeah, you may get a little double top. You may get like a little failed. You have a level. There is a level there, because look, old support, new resistance. You have that in your favor. The problem is the price action isn't cooperating right now. So, I mean, you should, like, after the first rejection, that rejection should have followed through. Instead, you get these green candles. And look, you had another rejection attempt, and this is what you get, a green candle. So that's not good if you're short, okay? What do? Well, make sure you have respect your stop, or maybe you take a small loss early and wait for another signal or something, work on a smaller time frame. I don't know, but this is not a good look for a short. I can tell you that right now. If I was short right now, that's not what I would want to see. You want to see like a larger red candle following through, at least breaking supports, something, not higher low and then daily lows being maintained. That makes sense? So on the smaller time frames, this could translate into trends, but on the bigger picture, this is really not a trend. It's just look at the levels, right? Watch your levels and work the levels, right? You have your support area right here, and you have your resistance area. We have one resistance here, which is a level. Okay, you want to pay attention. It's just that the price action is not cooperating at the moment. And then you have the other level up here somewhere, right? The 70 area. Those are your levels. Anything in between is just going to be noise. All right, does that make sense for oil? Ricky said he wasn't able to watch, so that's for Ricky. All right, let me know if you have questions about that, guys. All right, and so let's take a quick look. I saw what we had. Neo. What were some of the other questions in here? I have to if I haven't addressed your thing, put it in the chat now. How are we doing with time? All right, a few more minutes. I may have missed. I know people were putting stuff in the chat earlier, and I think I saw Neo in there. Okay. All right. Well, Ricky requested two. I'm just going to do one because Ricky, I can't. I got other people here, but I appreciate that though. I'll do it next time. Let's see where else we got here. I don't see. I know. Alex put something in there. I think it was Neo. Oh, SMR. Oh, right. Okay, got you. SMR he put in there, but he just said we were just looking at the. He was just looking at the outcome. All right, let's take a look at SMR real quick. SMR. This is a power play here, and he said that it basically. Now I don't remember actually my analysis on this thing. So Alex, I mean, I don't know if it. Let's just look back here, see if I could remember. Oh, is this maybe like the wave 5 pullback situation? I mean, look at this thing. Does this thing not look like Bitcoin? So I suspect that these power plants are going to start looking similar to the Bitcoin chart and all that stuff. And the reason for that is Bitcoin depends on electricity. AI also depends on electricity. These things, these power plants, they produce electricity, right? So that's going to be a theme, I think, with these things, right? Something to just think about. Anyway, all right. I don't know what to really say about this except that we have the support area held basically, but it looks like it's producing a lower high, and this looks like a head and shoulders developing. Let's look at maybe the weekly chart will make it more obvious. Right. Well, look at that pullback. Was this a wave 5? I don't know if maybe Alex isn't there. This could be this looks like a wave 5 situation, right? That's what this looks like. And typically, this is what happens after 5 waves. Okay, that pullback. And people don't see it coming. And it can come out for any reason, just some dumb reason, right? Sentiment changes, but that's what wave counts are about. They're about sentiment. That's what they're actually measuring. So that's why it really pays to just be familiar with the wave count. Maybe you're not taking trades on it, but the wave count gives you a heads up and says, hey, this thing is on all-time highs. There's 5 waves. You should probably not be buying right now. And any little minor pullback, you should probably ignore if 5 waves are completed. Compare that to when you only have 4 waves in play, right? And there's a 5th wave possible. That's not the same mindset, right? That's where the wave counts can really offer valuable guidance. A lot of people overlook that. All right. So I want to just take a look at the bond market real quick. ZN1. That's the bond prices. because as the dollar and all this stuff happen, remember, keep an eye on this, because you're going to see this thing moving with gold and the dollar, because this is where the game begins right here, the bond market, right? So let's go to the weekly chart. And this is where, we have FOMC. I'm sorry. We have non-farm payrolls this week on Friday. This market can be dramatically affected. We have the FOMC this month, right? That's like in, I think, week 3 or whatever. And they're expected to do the stuff that they're expected to do. Watch this market. This is the 10-year note futures, right? The 10-year note is a big tell. You see here that the 10-year note has been range bound for months and months and months. When it breaks this range, that's probably when we're going to get some sort of meaningful market move. The whole market, right? The stocks, everything. So if it breaks the high part of the range, that means yields are coming off. That means interest rates are going lower, and that means inflation, right? That's what that means. Because when yields come off, bond prices rally, right? But if bond prices sell off, that means yields are rising. And yields have been rising on their own, right? Like there's been strange things with the bond market. US 10Y, this is the bond yield, okay? Now, of course, it should be inverse. It's inverse to the bond prices. But this is what you have to watch. This is what everyone talks about, the yield, right? So when if the bond prices sell off, that means this is breaking out. And this looks like it's poised to break out, doesn't it? This looks like a higher low consolidation. So it can go either way. It's going to depend on how these economic events play out. But the chart can at least give you a clear sign. We break bullish breakout on this thing. That means bond prices are selling off, right? That means yields are rising. That's bad for everything. People that borrow money, it's bad for banks, it's bad for businesses, it's bad for everything, right? In that scenario, that's where you're going to see the bank failures. That's when the risk of the bank failures goes up. Why? Because they're all long bonds and the bond prices go into the toilet and they're leveraged and then they can't, they get a margin call. The Fed is prepared for that, by the way. I think it's the Treasury is prepared to give them money for when this happens. Just understand that. That's a thing. Google it. That's a thing, right? So if we break out to the bullish breakout, that means the bond prices are selling off. If yields sell off, that means bond prices are rallying. The government, the Fed is being pressured to lower the short-term rates, so we should see these yields sell off. That's what we should see. Now, keep in mind, there's a little conflict here, and the conflict is we have to sell. The U.S. government needs to borrow money, right? We need to borrow a lot of money to fund all this other stuff. They sell treasuries to raise this money. But if no one wants the treasuries, in order to attract people to buy, what do? They raise the interest. They sell them at higher interest rates, which means this goes higher, right? So I know what I'm saying here might sound complicated, but just understand, if this thing starts spiking to the upside, that's not a good thing, right? And that's where we're going to see substantial weakness, I think, across the board, which may be a buying opportunity, because remember, the administration is going to do whatever. They're going to pull whatever they can out of where to make things good again. That's what they do. They have like a magic hat and they pull rabbits out of it. That's what they do. All right? That's what they do. So we can, I'm not going to get into politics here, but I'm just saying that's what they do. So don't become too opinionated. Have an open mind. Watch the bond market as a tell. That's how I use it. Again, I can't take trades off of this, but this could be an important tell for investing, right? A good timing mechanism, because if we get those rising yields and everything starts to sell off, that will tell you. And as long as the yields are rising, you want to kind of hold off, right? as opposed to if we get the yields going the other way, selling off, then that's where accumulating slowly now would come into play. And if you accumulate slowly now, remember, there may come a point where you have to also ease out of that position too. Like, let's just say you accumulate 10 or 15 shares and it goes up and it's pushing new all-time highs. It would probably be a good idea to just take some of that off the table just to do it, just to lock and reduce the risk when you have those situations that call to reduce risk. Instead of looking at it with a bias and being like, oh, I'm only up like, $100. I'm not going to take any money off. Well, you should get in the habit of looking at it from more of a system-like way, right? Rather than an anecdotal way. That's all I'm saying. All right, enough talk. I talk too much, as you guys know. All right, guys. So I appreciate you guys sticking around with me here. I know I'm running behind schedule. I'm going to wrap this up. If I missed your question, I apologize. Come back next week. I'll be back on my regular time. Okay, and we'll go over it there. Again, thanks, guys. Thanks for your support. I always appreciate you guys. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you so much for watching.